Hey, what's going on YouTube? You guys have tuned into Rules for Rebels, and in today's video, we're going to be talking about the GameStop stock and kind of everything that's gone on. This has become a huge issue. Basically, and if somebody in the comments wants to maybe explain this a little bit better than I can, feel free to do so. But basically, Wall Street hedge funds, big money, was trying to short GameStop's stock and profit off the stock going down. Now, everybody on Wall Street Bets on Reddit kind of got together and said, let's buy this stock, let's drive this thing up, and let's kill the shorts. And with a short position, you eventually wind up having to buy the stock to cover that position. And if the stock price winds up going up, you're losing money, and the more the price goes up, the more money you're losing. And so basically, you know, a bunch of Robinhood traders and average Joes like you and I wound up fucking Wall Street and fucking hedge funds. And they're very, very upset about it. I have a prediction. I don't know if you guys, I don't put out many of these YouTube stories, but I put out one earlier. And I said, mark my words. Actually, you know, I'm not going to say this is like definitively going to happen, but I wouldn't be shocked. I made a prediction that within the next, say, 4 to 6 weeks, Wall Street Bets is going to be shut down on Reddit. You know, it's everyone shutting down everybody, big tech shutting down everybody. Everybody needs to be silenced. We saw Donald Trump, Shopify get shut down. We saw GoDaddy shut down AR15.com. Twitter silences people. When the little guys start messing with big money, they need to be stopped. And I would not be surprised at all, and I actually somewhat expect Reddit to shut down the Wall Street Bets subreddit. So, you know, today is January 27th, 2021. We'll wait and see what happens with that one. Let me know what you guys think. Do you guys think that might happen, or do you think no way that's going to happen? And here's what's really interesting, right, is way back at the beginning of COVID, I don't know if you guys remember this, but insider trading in Congress, how lawmakers get rich from the stock. And way back at the beginning of COVID, we learned about how, who was it? It was Senator Kelly Loeffler of Georgia, Dianne Feinstein of California, James Inhofe of Oklahoma, and Richard Burr basically used insider information and inside knowledge about the coronavirus to make a bunch of money in the stock market with that inside information. And not only did they use that information to make money, but they misled the public to basically cause the public to lose money so that they could make more money. Here's another video, and kind of what I'm trying to set up here is that you know, gold markets, silver markets, the stock market, it's always being manipulated. As long as it's politicians, congressmen, senators, Wall Street, and hedge fund managers doing it, it's completely fine and nothing ever gets done about it. I think recently we just learned that none of these senators that traded with inside information are going to be charged with anything. Yet as soon as a little guy starts fucking Wall Street a little bit, now all of a sudden the world's falling and we really need to put a stop to this quick. This is a pretty famous video. I don't know if you guys have ever seen it. It's about 10 minutes long, so I don't know that I'm going to play the whole thing, and I don't know how well the audio is going to come through. But this is a video that wasn't meant for the public. This was a video meant for Wall Street. And Krame of CNBC he's on, Krame talks about manipulating the market. And he kind of talks about strategically manipulating the market. At first, he's talking about doing it within the guidelines of the law. And he says, I would never admit this on TV, but, you know, we manipulate the market. And then later, he essentially says that he breaks the law, but that the SEC is too stupid to ever catch it or know any better. So let me play a couple clips for you guys here.
Worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal, right? And it's a very quick way to make money and very satisfying. Okay. By the way, no one else in the world would ever admit that, but I care.
That's right, and you can say that here.
I'm not going to say it on TV.
See, he's not going to say it to the small-time plebs like you and I, but to his Wall Street buddies, yeah, we manipulate the market.
Well, on a related note, there's so many more hedge funds.
You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So, I mean, let's say I were short. What I would do is I would hit a lot of guys with Brim. Now, you can't foment. That's a violation of
Ferment.
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So, that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself.
So, we're bigger and more important than the little guys, and the SEC is stupid, so we're going to manipulate markets, and we're going to break the law because we got to keep our hedge fund making money. And what's really hilarious is this stuff has been going on for pretty much forever, at least decades, and nobody cares. Nobody cares to stop it, right? The politicians are in bed with the hedge funds and Wall Street. Kramer's doing it. It's all good. But as soon as a little guy figures out a way to fuck the big guy, guarantee you Wall Street Bets is probably going to be taken down. We have to figure out how to stop this. Let's take a look at a couple of articles here. So GameStop jumps more than 130% even as hedge funds try to cover short bets. Scrutiny of rally intensifies. Key points from this article: the latest move comes higher as some of the high-profile short sellers of GameStop, including Melvin Capital and Citron, announced that they covered most or all of their positions. The stock appeared to get a boost in extended trading Tuesday after Tesla CEO Elon Musk tweeted out the link to the Reddit board where much of the discussion has taken place. And GameStop's rapid rise has drawn comparisons to the speculative trading during the tech bubble of the late 1990s and led many Wall Street veterans to warn investors about potential for significant losses. Shares of GameStop again surged Wednesday, continuing a streak of wild swings for the stock, as several high-profile short sellers said they had backed away from their positions. They really hadn't. The name closed at roughly $348 per share, up almost 135% from Tuesday's close, and giving the company a market cap of about $24 billion. The stock traded as high as $380 per share during the session. The latest move higher comes as some high-profile short sellers of GameStop, including Melvin Capital and Citron, announced that they covered most or all of their short positions. That's a lie, they didn't. The stock lost some of its pre-market gains after the short sellers made their announcement, but shares rebounded to new highs shortly before the market open. GameStop's nearly vertical surge over the past week has come as retail traders, many of whom have documented their moves on the social media site Reddit, have piled into the stock and call options. The spiking share price has helped to create a stock squeeze where shorts and options dealers are forced to buy shares of a rising stock to cover their positions, resulting in a feedback loop that drives the stock even higher. The short selling is a strategy in which investors borrow shares of a stock to sell them at a certain price in expectations that the market will continue to fall below that level when it comes time to pay for borrowed shares. The name appears to get a boost in extended trading on Tuesday after Tesla CEO Elon Musk tweeted out the link to the Reddit board where much of the discussion has taken place. The video game retailer, which has had a market cap of less than $4 billion at the end of last week, was the most traded stock on the market by value Tuesday, according to Deutsche Bank strategist Jim Reed. TD Ameritrade midday Wednesday said it put in place restrictions on transactions involving GameStop and AMC Entertainment. I was kicking myself. I was almost going to throw some YOLO money at AMC a couple weeks back, just because it's pretty much the biggest movie theater chain, at least in my area, no one that I see around. I figured eventually COVID restrictions have to lift. I kind of anticipated once Biden got into office that COVID restrictions would start lifting, and they have, right? We see California's opening back up. Chicago, which has had an indoor dining shut down and been shut down pretty much since March. Chicago's opening back up. Detroit's opening back up. New York's opening back up. I'm sure the timing isn't suspicious at all, coming like 2 days after the inauguration. But, I kind of anticipated the world was going to be opening back up, and I figured it was kind of like a lotto ticket on AMC. Didn't wind up buying the stock. I don't know if I was just being a pussy or if I just was too lazy and never went and bought it. But AMC is trading at about $18 last I checked. Let's see. GameStop's rapid rise has drawn comparisons to speculative trading during the tech bubble of the 90s and led many Wall Street veterans to warn investors about the potential for significant losses. Do you think they're warning people because they want to protect them, or do you think they're warning people to try to scare them off because they don't like that people are interfering with their money making? Hedge fund manager Michael Burry, who reported holding 1.7 million shares of the stock at the end of September, said in a now deleted tweet that the rise was unnatural, insane, and dangerous. Burry also told Bloomberg News that he did not have a current long or short position in the stock. William Gavin, Massachusetts top securities regulator, told Barron's that the trading in GameStop could be systematically wrong. Bank of America raised its price target on the stock to just $10 per share on Wednesday, saying in a note to clients that the increased share price could help GameStop's turnaround plans, but represented a risk for investors. While it's difficult to know how much very short interest and retail ownership could continue to put upward pressure on shares, we think fundamentals will once again factor into the valuation, the note said. Officials from the Securities and Exchange Commission said in a statement Wednesday that they were monitoring volatility in the equities and options markets and work with other regulators to review the actions of market participants. So the SEC has no problem with Congress having been insider trading for decades. The SEC has no problem with politicians using insider information about COVID and lying to the public to make money. But as soon as a couple Robinhood traders band together and buy a stock, all of a sudden now we got to do something about it. And here's something interesting as well. For anybody who likes government, supports government, you realize that it took the government 9 months to decide to give you a measly $600. But as soon as Wall Street starts losing money and as soon as they start losing some money, all of a sudden they're ready to act on a dime and make something happen right away. Fuck all of them as far as I'm concerned. Here's another article from Mediaite. Nasdaq CEO suggests halt to trading to allow big investors to recalibrate their positions to combat Reddit users. Nasdaq CEO Adena Friedman suggested Wednesday that her exchange could halt trading activity for stocks to enable investors to recalibrate in the event they were targeted by internet users. She made the comment in a morning interview with CNBC's Joe Kernan, speaking in reference to price surges inspired by Reddit users. Members of the website's Wall Street Bets forum caused stock prices to surge to obscene heights this week for companies including GameStop and AMC Theaters. I think that in general, when we evaluate how we would manage through a situation where you see a significant run-up in a stock, not based on news, not based on fundamentals, what's really funny? The stock, we're in a global pandemic. The world's ending. Everyone's lost their jobs. Unemployment's insane. Everyone's about to get evicted, but stock prices are at all-time highs. And the Fed continues pumping fake money to keep stock prices going up. And nobody has had a problem with the fact that for the past year, the stock market has been completely disconnected from reality, and there's no reason stock prices are where they are. We just say, oh, well, the stock market looks to the future, and the future is going to be better than it was yesterday. Nobody has an issue with the stock market not being based on fundamentals for quite some time now. But now all of a sudden, we got to put a stop to this. What we do is we have technology that evaluates social media chatter. If we see a significant rise in the chatter on social media channels, we also match that up against unusual trading activity and potentially halt that stock to allow ourselves to investigate the situation and be able to engage with the company and give investors a chance to recalibrate their positions. GameStop as well as AMC Theaters appeared on the New York Stock Exchange NYSE rather than on the Nasdaq, leaving Friedman powerless to influence this week's events. But some regulators have called on the New York Stock Exchange to halt trading for at least GameStop, including Massachusetts' top securities regulator, who said the robust investment activity wasn't rational. I really think at this point it calls upon the regulators, in this case, New York Stock Exchange, to consider simply suspending it for a month and stop trading it. Massachusetts Commonwealth Secretary William Gavin said in a statement to Barron's, "These small and unsophisticated investors are probably going to get hurt by this." So they're not doing this to save the small time investors from themselves. They're doing this to save the big hedge funds and their buddies in high places. There's no rational basis for this run up, he added, and it's not just a run up. It's also a run down. It's extremely erratic. Clearly, there's a problem here with the way that options are being used in this case, and it needs some regulatory intervention. And I think the most prudent thing is if it's suspended for 30 days. So hopefully you guys found this interesting. Let me know your thoughts on this. If you guys are looking for a stock trading strategy, I'm not sure how much longer this will wind up working, but all these meme stocks and Wall Street bet stocks, if you just dump money into them for the past couple months, you've made out pretty well. Let me know your thoughts. Drop a comment down below. If you're not subscribed to the channel, click the subscribe button below, ring the bell, and we'll catch you on the next video.